Once upon a time, two guys in a garage started a revolution that changed the world. From that small dream, Apple became the symbol of design, innovation, and technology. But after all these years, is the magic still there? Let's find out. Today we're taking a look at Apple, ticker AAPL, listed on the NASDAQ, the most valuable company in the world. But is it still a good investment in 2025? Let's find out together. Apple designs, manufactures, and sells some of the world's most popular devices: iPhones, iPads, Macs, and Apple Watches. But it's not just about hardware anymore. Services like iCloud, Apple Music, and the App Store are now a major growth engine. What makes Apple unique is how all its products work perfectly together. Once you're inside the Apple ecosystem, it's almost impossible to leave. Here's how Apple makes its money. The iPhone still brings in more than half of total revenue, followed by services, Macs, and wearables. Geographically, Apple earns money everywhere from the US to China and Europe, proving how global its reach has become. The diversification helps balance risks, but the company still depends a lot on the iPhone cycle. Apple stock has delivered strong returns over the past 5 years. Despite market corrections, it continues to outperform most tech peers. That consistency shows investors' confidence in Apple's long-term business model and its ability to generate steady profits. Revenue climbed from around 275 billion United States dollars to almost 400 billion today. That's solid growth for a company already at massive scale. The takeaway: Apple still knows how to increase sales, even when global smartphone demand slows. Profits followed a similar trend, rising from about 57 billion United States dollars to over 90 billion. This shows incredible efficiency. Apple turns every dollar of sales into more bottom-line profit than most of its competitors. Free cash flow is one of Apple's biggest strengths. The company generates over 100 billion United States dollars per year in cash after expenses. That's huge. This cash gives Apple flexibility. It can buy back shares, pay dividends, and invest in new technologies without borrowing. The operating margin sits around 30%, extremely high for a hardware company. It shows how efficient Apple's supply chain is and how powerful its pricing remains. Even as production costs rise over the past decade, earnings per share more than doubled. This long-term compounding effect rewards patient investors, the kind who buy Apple and simply hold. Apple currently trades at a price-to-earnings ratio around 30. That's higher than the market average, meaning investors are willing to pay a premium for quality and stability. Not cheap, but fair. For a company with this level of reliability, Apple pays a small but steady dividend, about $1 per share yearly. The yield is modest, but the company increases it regularly while buying back billions in stock each year. It's more of a bonus for loyal shareholders than a core part of returns. Apple's debt has decreased in recent years, now around 85 billion United States dollars. That's very manageable given its cash reserves and profit levels. Financially, Apple remains one of the healthiest balance sheets in the world. Most analysts rate Apple as a buy or hold. Price targets show moderate upside, nothing explosive, but steady confidence. Analysts expect services and wearables to drive the next wave of growth alongside AI-related projects. Apple's biggest strengths: an iconic brand, a powerful ecosystem, and a growing share of recurring revenue from services. That combination gives Apple both financial stability and emotional connection with consumers, a rare mix in business. But even Apple has risks. The company still depends heavily on the iPhone for profits. Innovation feels slower lately, and regulators keep pushing back against the App Store model. Its reliance on Chinese manufacturing also makes it sensitive to geopolitical tensions. Here are my final thoughts on Apple. I'm not a shareholder of Apple right now, but I always keep an eye on it. It's a company with extraordinary financial strength, loyal customers, and a proven track record. Maybe it's not undervalued today, but for long-term investors, Apple remains one of the most reliable names in the market. This is not financial advice. Always do your own research before investing. Thanks for watching. Like, share, and subscribe for more weekly stock analyses. And tell me in the comments which company you want me to cover next. See you soon. This was InvestiChan.